Last week, corn, soybean, and soy meal futures made new highs. China daily and corn and soy meal futures also made new highs. Will it continue?
Last week, corn, soybean, and soybean meal futures and Dalian corn and soybean futures made new highs. I think this will continue. I think that China needs to import soybeans and corn. I think the South American crops will be down enough that will increase the demand for U.S. corn and soybean exports, lower the carryouts, and allow prices to trend higher early in 2021.
What will the USDA say this week in their monthly U.S. and world supply and demand report?
On January 12th, USDA will come out with their monthly revision of U.S. and world supply and demand. They're expected to put a final 2020 corn and soybean crop a little bit below their last estimate in November. They're also expected to raise U.S. corn and soybean exports, lower corn and soybean carryout, maybe lower South American corn and soybean crops, lower world corn and soybean ending stocks, and estimate U.S. 2021 winter wheat planted acres higher than a year ago. The degree of how much they change will be key to prices. If they don't drop the numbers as much as people hope, we could put a temporary top in the market. If they do, we could continue to rally. So it's a very critical report and expect very volatile market reaction to the USDA numbers.
What is the latest managed fund, index fund, and commercial net futures and option position and potential impact on prices?
Managed funds have a near record long position in the grain room. We are overbought, and there are times in which the market feels like it needs to make a setback to cleanse itself from this overbought situation. The index funds are also record long. And right now we're in the middle of a rebalancing where they move money from markets that rallied in 2020 to markets that are at the lower end of a historical trading range. So there's a lot of movement of money from index funds. If the index funds and the managed funds are record long, that makes the commercial record short in the grain room. And so what could happen is that in any news, the funds could liquidate some of their long positions if it's not positive. As far as commercials are concerned, we'll have to watch and see if the market rallies, if they want to hold those positions given increased margin calls. I still think the markets are going to trend higher. Tomorrow's USDA report, South American weather, the vaccine versus the virus, and any uncertainty in Washington will keep the markets volatile.
Corporate earnings report season kicks off this week, and earnings are projected to be down year over year. How will stock index futures react?
So stock index futures are under some pressure today, and it looks like in the short run, traders will be placing their focus on the political situation. But in the longer term, I think it still is the interest rate environment that will dominate, and that will support stock index futures in the very broad terms.
The U.S. dollar index fell to its lowest levels since May 2018 last week, but have since recovered. What is the outlook for the greenback now?
The long-term outlook for the U.S. dollar still remains bearish with what we're seeing. Of course, we do have the ongoing increasing debt situation, the very low interest rate environment that is likely to stay with us for quite some time. And that, of course, would mainly be at the short end of the curve. Rallies that we have seen now over the last couple of days, I believe, should be viewed as selling opportunities. It still looks like the main trend is lower for the U.S. dollar index.
What is the best way to trade the 30-year Treasury bond futures?
So last week we did see the 30-year Treasury bond futures falling to their lowest level since last March. I thought it was very disconcerting in a sense that there was basically no rally in the bond market, even though on Friday we had the very weak non-farm payrolls report showing a 140,000 decline when a 50,000 increase had been expected. That is a very bullish fundamental, and yet the bonds did not respond as they should have. So anytime a market does not respond in the fashion that it should based on the news, that in itself is a sign of weakness, especially in this case. So continue to trade the bonds from the short side.